Ladies and gentlemen, good day and welcome to the Pokarna Limited Earnings Conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone telephone. Please note that this conference is being recorded. I now hand the conference over to Mr. Gavin Desa from CDR India. Thank you, and over to you, sir.
Thank you. Good day, everyone, and a warm welcome to Pokarna Limited's Q3 and 9-month FY22 earnings conference call. We have with us today Mr. Gautam Chand Jain, Chairman and Managing Director, and Mr. Paras Kumar Jain, Chief Executive Officer, Pokarna Engineered Stone Limited. I trust most of you have gone through the communication and result presentation mailed to you earlier. In the interest of time, we would like to commence Q&A immediately. So I would like to request the moderator to open the floor for Q&As.
Thank you. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may enter star and 1 on their touchtone telephone. If your questions have been answered and you wish to withdraw yourself from the queue, you may enter star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. To ask a question, you may enter star and 1. We have the first question from the line of Abhishek Pandal from Bowhead, India. Please go ahead.
Hello. Thank you for the opportunity, sir. I have just one question, which is what was the capacity utilization of the new plant in Q3?
See, as I mentioned in my previous discussions as well, that ramp-up of capacity is relatively also linked to the shipping situation evolving, because I think the availability of container and the spaces on the vessel and the vessel schedules are still tight. So while we are making all the efforts to ramp up the capacity, but largely we are constrained because of availability of the container. So between 60 to 65% is the current number at the unit 2.
Okay, thank you. And just a small question. So, as you know, a decent amount of our demand comes also from hospitality sector, and where margins are also good. So, have you seen any demand from that sector now?
There is a uptick in the inquiries. So, I think probably the case is getting built up. So, right now the demand has still not come back. But I think if the COVID situation normalizes after Omicron, probably there will be a little better situation than what we are today in hospitality segment.
Thank you so much, sir. That was it.
Thank you.
Thank you. We have the next question from the line of Ravi Naredi from Naredi Investment. Please go ahead.
Sir, thank you very much. You have given the nice numbers in this quarter. Sir, your query, how many years it will long last?
Are you asking about the granite quarries?
Yeah.
See, basically the quarries, there is no rule how many years it can last, because they can be deposits but which are of no commercial value, then it is of no use. But more or less, most of the quarries that we operate are all bigger quarries, and we hope that the deposit should last for another 25 to 30 years minimum.
Oh, nice. And how much distance from our factory to quarry?
No, there are different locations of quarries, and all the lowest distances are ranging from almost 1 hour drive to up to as good as 24 hours to 36 hours drive also.
Okay.
All quarries are in different directions and different locations.
Right.
So that does not have much relevance to the factory and the quarry.
Right. And sir, what is the reason EBITDA down but after tax improves in percentage term? How you did this magic?
I didn't follow it. Are you talking about granite or quartz?
You had given a consolidated financial figure, margin 32.2% EBITDA margin versus 34.4% last year, and profit after tax improved 17.58% versus 15.7%. So EBITDA margin down by 220 basis points, but net profit margin improved 188 basis points. So how this magic you have done?
If you look at all the past history, the EBITDA depends on also the product mix that we make during that quarter and also the thickness.
Okay.
So the major reason would be that also if we are making more of 30 mm thickness, and also then also depends on the foreign exchange fluctuations.
Okay.
So you have to look at totality.
The foreign exchange fluctuation is more important than this thickness, because forex gain will transfer to bottom line. That is important thing, sir. And sir, how is the logistic problem now?
We are living with it. Nothing exception for us. We are managing to push whatever best we can do. But the situation still in some ports of US is very bad.
Right.
And we don't think there is an immediate solution.
Okay. So we have to face in future also. Thank you very much to give the nice time.
Thank you.
Thank you.
Ladies and gentlemen, before we move to the next question, we would request participants to ask 2 questions, to limit their questions to 2 during the initial round. We have the next question from the line of Pranav Mehta from Equirus Securities. Please go ahead.
Yeah, thank you for taking my question, and congratulations, sir, on a very good set of numbers. Sir, I just wanted to understand on the countertop market. So basically, if you see a lot of the tile players are now entering the kitchen and table countertop markets, and even if you see Caesarstone has acquired Lioli for the same purpose. So if you can throw some light how this market is developing and whether that will impact the quartz countertop market globally, or they can grow parallelly. That was my first question.
Yeah. So basically, see, the quartz has been a countertop material for all practical purpose. So largely, it either goes on a countertop or it goes to a vertical cladding, all interior purposes. So like with many products, like there has been traditionally, if you look at it all started with laminate, then it got into natural stone like granite, and then came the engineered surfaces. So if you look at the entire market size, and within engineered surface today you have engineered stone, which is quartz surface, then you have porcelain or ceramic slab, then you also have some solid surface. So there are different pockets and there are different applications in the markets, and again the price points are also different. So we believe that the category into which we are today, which is quartz surface category, has its own niche and its own growth. And we believe that is going to continue in spite of other categories coming in, because there is a lot of marketing initiative which is required to be done to create a category over a period of time. So I think products will keep growing, coming, but the focus on quartz is going to continue, is what we believe.
Sure, sir. And sir, just a additional question on this front. So apart from US, are we targeting to enter other, let's say, mature but still good markets for quartz countertop like Israel and Australia and UK, or are we focusing only on US in particular as of now?
We have different markets, but large part of the concentration is US definitely. We do have presence in Palestine. We have presence in other parts of Europe as well, including a good amount of presence in UK, Canada, and we are also working on expanding our reach within our own country, and also looking at tapping other markets where there is a flexibility to, position the product.
Sure, sir. And sir, my second question was on margins. So how are we positioned to improve the margins, let's say, over the next 2 years? So any guidance you can give on whether we can start reaching, let's say, 36-37% kind of EBITDA margins, mainly led by quartz, anytime soon?
See, these are very challenging and unprecedented times. So I think any amount of planning we do today for 2 years is probably a guess, and rather a wild guess. So it's very difficult to comment on whether we'll become 35% plus or not. But I think, as I was mentioning always in my previous call, I think 30% plus of EBITDA is what is our internal target. and we want to make sure that we achieve that, and whatever comes on will be all dependent upon how the raw material inflation and the shipping brings in.
Sure, sir. Thank you very much.
Thank you.
Thank you. We have the next question from the line of Sachin Kasera from Swan Investments. Please go ahead.
Yeah, good morning everyone, and congratulations to the entire Pokarna team for such good numbers in these challenging times. So 2-3 small questions. One was, you indicated 60-65% utilization. That is for the new plant, or that is for both the plants combined?
That is for the new plant.
And any sense you can give us on the old plant, sir?
Old plant is running at the optimum capacity.
Okay. Secondly, you mentioned that the challenges still persist. If you could give us some sense, how are you seeing the ramp up for this new plant? Can we see that every quarter there will be some improvement, or at least for next 1 or 2 quarters it will remain in the 60-65% range?
I think largely the ramp up is all linked to how the shipping situation pans out. So, and with the Chinese New Year coming, I think going to be largely in line with what was one of the difficult quarters in the previous one. So I think next couple of quarters will definitely be a little tighter.
Mm-hmm.
And
hopefully
if they are tighter, it's all going to be range bound. So I don't see a large improvement in terms of utilization, at least for next 1 to 2 quarters. So that will give us the time to work upon the products and do some better product mix.
Sure. And secondly, any sense you can give us on how is the response coming on the domestic market?
The domestic market response has been definitely very pleasing, and it's going in the direction which we have planned. Our digital marketing initiatives and other pull and push strategy which we have deployed by getting into the kitchen and bath segment, positioning the product, that seems to be bringing the right traction. So I think it's a long journey, but I think the direction is very positive.
Any numbers worthwhile sharing for domestic market, where we are in terms of revenue?
We are still in a single digit, but I think the current focus is to get a presence across India. So currently we are close to 100 locations, but then as we expand the footprint, that's when the numbers will come in. So I think it's more of a market making activity right now.
And just lastly, on the debt, if you can give us some sense, how do we see the debt reduction plan in the next 12 to 18 months?
See, right now I think we do not have any capex plans on board currently. So I think whatever is our commitments, we have commitments like next year. I think we have about almost 16 crores to be paid, and then we have about 30 crores onwards from 23-24 onwards. So I think right now the same, whatever the annual commitments are there, I think we'll be able to meet those easily. And then unless there is any other investment coming through, I think largely everything what we earn will only go towards rationalizing our interest expense and reducing the debt.
Sure. Thank you very much. I have some more questions. I'll follow up in the.
Sure. Thank you.
Thank you. We have the next question from the line of Prateek Singhania from Sage One Investments. Please go ahead.
Yeah, hi sir. Congratulations on the great set of results. So my first question is with respect to the utilization, like continuing the previous participant question. So this logistics problem was pertaining from since last 2-3 quarters, but despite that we have been able to ramp up our utilization in the plant to an overall 175 crores of turnover. So what stops us for increasing this capacity utilization? Because in challenging time also we have been able to ramp up our utilization.
See, basically we always want to maximize as much as we can. But then sometimes what happens is that it is a continuing business. 1 quarter can be good or 1 month can be good, which will help you to recover whatever you lost. But then there can be 2 months which in a quarter which can become challenging, and then you may probably not be able to make up what you did in the previous quarter. So we believe that definitely ramp up is linked to the shipping, and that's an impediment. So largely while we are focusing on getting more and more containers using all our means possible, but then that is something which we actually cannot control and comment upon.
Okay. And in terms of some market share with respect to your target customer, like as compared to last, say, 2 quarters back, compared to that, like what would be your share of market share into your target customers?
We don't have a defined number in terms of what is our overall market share in a customer's portfolio. But what I can say is that we are definitely having a larger shelf space in our customers' portfolio than before.
Okay. All right, sir. Thank you.
Thank you.
Thank you. We have the next question from the line of Vivek Gautam from GS Investments. Please go ahead.
Yeah, sir, congratulations. I've recently started tracking the company. Numbers are really good. So just wanted to know that some of your competitors are not having not exactly competitors, but yes, they are the same, basically into the same sector. They are, the customers have to bear the freight charges, or that also has to be borne by us, sir?
It depends upon the pricing model what you adopt with your customer. There are some pricings which are on free on board basis. There are some pricing which are on CIP destination port delivered basis. In any case, basically the customer pays for the freight, and that's part of the price. So if we are paying and then recovering, he pays for it, or he himself arranges a container or a shipping and then he pays for it.
Okay, sir. And currently the housing boom in US contributed a lot in our favor. So with this rise in interest rate in US and the COVID TVs getting reversed, how much impact can it have on our business in US? And then in case the US slows down, then what are the backup options for us in other countries and continents, sir?
We operate both in residential and the hospitality or the commercial side of the business. I would say rather residential and commercial. So right now the residential seems to be, because there is a good amount of renovation market which contributed, and there was also some new development which came in. But the commercial business was largely down because of obvious reasons. So I think we have a balanced portfolio of residential and commercial clients. So I think while we are not insulated completely from a downfall of one or the other segment, but largely because we are positioned on both the sides of the business, there is a relatively a better position than being on just one side of the game. That's one part. Secondly, as I said at the beginning, our focus is US definitely. So whatever we do to focus on the other market, it's impossible to, overnight or in a limited time transfer your entire exposure. So I think the exposure to the US will continue, whatever comes through.
Okay, sir. And sir, yours is a really founder-led organization. You devoted your life to Pokarna and has built it up to such a company level and one generation. That is really truly commendable. And but now, what are the succession plans and what are the professionalizing arrangement you have in mind? Because the key man risk is also there in our company, sir.
See, if you look at the entire setup, this company was always run by professionals. So while the promoter family is the large shareholding this thing, but there has been always professionals at helm of the affairs from the day when we started.
Okay, sir. Thank you.
Thank you.
Thank you. We have the next question from the line of Rishikesh Bhagat from Kotak Asset Management. Please go ahead. Mr. Bhagat, your line is unmuted. Please unmute and go ahead. As there is no response from this line, we'll move to the next question. The next question is from the line of VP Rajesh from Banyan Capital. Please go ahead.
Yeah, thanks for the opportunity. I joined the call late, so this may have been answered.
Mr. Rajesh, I'm sorry to interrupt, but the audio from your line is not very clear, sir. Could you improve it a bit?
Is it better now?
One moment, sir. Yes, please go ahead.
Yeah. So my question is that with respect to our B2C business, what kind of investment are we planning to make in the next 2-3 years, and what kind of revenue opportunity you see there?
See, basically our B2C largely is targeted in India, and we are in the US. We are either a B2B brand, and largely a B2B brand. We are not getting into a B2C category in the US. So all the investments, what you look at in terms of whether it is providing the point of sale material to all the other marketing support to what we want to give, it will all be in less than $1 million over a period of time.
Okay, and that's in India. You're saying you'll invest less than $1 million in that, right?
Yeah, over a period of next 3 years, that's what we are targeting. So it's not a 1 year period, because the strategy in India is relatively different, and we are now more focused on digital advertising than on the print heavy. So that makes we are trying to build a different type of business model in India. We are just not selling a product. If you look at our entire offering, we are a 360-degree company, only company in the country today, to give you a complete experience on the product from measurement your place to the installation of countertop at your place. So within 12 working days, we actually come to your place for half an hour, do the measurement. On the 12th day, we come back and install the countertop, and we are out of your home in 4 hours. So that is the type of last mile connectivity and the business what we are targeting at. So we are building a service, a revenue model along with the service actually in India, which is very unique, and we are the only company in this which does it in a professional way with all safety, all sustainable practices put into it. And then we don't create any noise or debris or any cutting or anything at your place. Everything installing our countertop. So the companies like all the German kitchen brands and many other Indian brands, we have association with them. So when they sell a kitchen and they order our countertop, we go to the customer's place. We do everything needed to get a factory finished countertop installed.
Understood. Thank you so much, and all the best.
Thank you.
Thank you. We have the next question from the line of Akhil Hazari from Robo Capital. Please go ahead.
Hello, good morning. Am I audible?
Yes, please go ahead.
So I just want to know on the overall revenue, could you give us any guidance for the coming 2 years, FY23 and FY24?
Actually, we generally do not provide any guidance for the coming year. But I think our last 2 to 3 quarters are largely predictable. If you like, average them out and do whatever relevant modeling you want to do, that will probably give you a direction to work upon.
Oh, okay, fine. Okay. That's it. Thank you so much.
Thank you.
Thank you. We have the next question from the line of Rishikesh Bhagat from Kotak Asset Management. Please go ahead.
Yeah, thank you for the opportunity. So my first question is related to I think in last quarter, clearly with the growth, there was definitely a pressure on the working capital. We saw the negative cash generation. So this quarter, the growth has obviously come back fairly strong. So how has been the situation on the working capital front?
See, if you look at the working capital, again, it is largely tied to the shipping situation, because what happens is that most of our payments are on the bill of lading. So while we produce and ship it out, it may be at a port. It may not be able to load onto the vessel, and we still do not have a bill of lading with us. So that's where the situation seems to be largely aligned with what you saw in the previous quarter.
Yeah, but this quarter, has there been the generation, any change, or it remains same? Has there been cash generation?
That's how you see the improvement. So I think unless the situation largely improves on the shipping, so dependency, the answer is simple. If the shipping situation improves, the working capital will definitely be in a far better position.
Okay. And on the granite front, obviously I understand the focus remains on maintaining profitability with the challenging environment. But nevertheless, just want your thought in terms of where, especially last quarter, there was some indication about some increase in royalty by the states also. So in that, against that context, where do you see the margins for this business, and probably where do you see revenue settle probably for this segment?
The royalty is already gone up. In addition to that, there are additional deposits that government has raised for the quarries that we need to deposit. So that is already part of the business now, last more than 6 months. So, but then more or less the profit of margin will always remain depending on the production in the quarries, because the main profit remains in the quarries, and if the quality of product that's coming out from the quarries are good, the profitability will increase. And also it depends on the, like for example, during heavy rainy season, the quarries are closed for more than a month because we have to de-water the quarries. So that also affects. But then it is very unpredictable. We cannot have a consistency, unfortunately, in this part of the business. There can never be consistency. Either it is depending on the quality of the product or the duration of operation time in the quarries, and also the demand. Sometimes some colors are in good demand, sometimes the other colors are absolutely not selling. So this will remain the same as what you see now.
Okay. Got it. Thank you.
Thank you. We have the next question from the line of Gaurav from Qualcomm. Please go ahead. Mr. Gaurav, please go ahead. We've lost the line for this participant. We'll move to the next question. The next question is from the line of Anant Jain, an investor. Please go ahead.
Thanks for the opportunity, sir, and congratulations on a great set of numbers. First question that I have is that what we see is that there is significantly higher employee expenses, both QOQ and YOY. What can we attribute this to?
See, as we expand our and ramp up the capacity, especially for the new plant, we had to hire a lot of people, and in this challenging time, talent management is definitely one of the important aspects of the business. So we wanted to hire a little more than what we actually needed to be sure that we are able to, retain whom we want to retain and are able to meet up to our expectations, and then also to, have some buffer just in case we are not, there is some attrition. So that's where it is, and I think largely now the employee strength will be controlled.
So if you can quantify the number of employees added in last 6 months, that would be helpful in this regard, or maybe in the last quarter, because the expenses have moved up significantly.
Last quarter and before quarter are almost the same.
See, what happens in this case is that, we also have some employee welfare expenses which are actually generally coming through in the third and the fourth quarter, especially like we give some increments, annual increments, and then arrears which come through basically. So that's where you see that the third quarter probably had a relatively higher employee expenses than the first quarter. So if you look at the overall number, the number would not be really a big number, but it is because that accrual came in little later, the decision. That's where the third quarter number came in, and also is the commission expense. And also because there is some commission expenses based to the management based on the profit that got provided first. So now I think what you see currently is largely in line.
So we should expect similar numbers from next quarter onwards?
I think now you are in a range-bound position, so the numbers should be largely the same.
Okay. The other question that I have is that, we have been constantly speaking about, the next thing for a company after, ramping up the capacity would be product mix changes. Can you please be more specific in terms of when you say product mix changes, what are we looking to do? That is one question, only on the product side. The second is, can you also provide some information on how are things, shower trays, etc., the new products that you introduced, are they doing in the market?
See, when I say product mix, typically it has two components. One is the thickness, other is the design. So when I say design, see right now, look at some designs, they are monochromatic colors. So they are running for a longer period of time, and they have reached the saturation level. So when I say a better product mix, I am concentrating more on a portfolio where I can have a higher thickness product, and also the products which are more closer to the natural marble of quartzites which are currently in demand, because a natural quartzite is a very expensive product. If you bring you cannot make an identical product, but if you bring something similar to the natural quartzite or marble which is at the higher range of the bracket, that's where you get a relatively better price than what you would be making a solid color. That's where the thing is. So that's again dependent on the market trend. It's a fashion. We are in a fashion industry. Let's be very clear about it. So it's a fashion trend which decides. So there are definitely some SKUs which are always available, but then there is a pricing which is already fixed. But then there are some SKUs which, depending upon the fashion, you have to develop. So that's where the differentiation in the product would come. Secondly, on coming on to this new product segment of shower trays and sink basins, in India, because because of COVID, we couldn't do much marketing in overseas. So this is the first time we actually are going to go to the US with the product while we are doing soft marketing. So we have to see how the response is. But in India, we've already started seeing a good amount of traction for our sinks. We are the only company which actually gives you a seamless integrated sink along with a countertop, which is not possible in the US because we are not doing a last mile connectivity there. So I think the journey for quartz basins and sinks has just started. So it's a long way to grow. So I don't think we should attribute any more revenues immediately to this particular segment. Thank you.
Okay. Thank you, sir. That's it from my side.
Thank you. We have the next question from the line of Aman Vij from Astute Investment Management. Go ahead.
Good morning, sir. My first question is, you had talked about that we currently are in 100 locations in domestic market. So what is your target for, say, next year and next to next year? Where do you see this location numbers going?
Our idea is that in 3 years, we want to be at least 500 locations. That's what our target is, that at least 500 points of sale have to be developed.
Sure, sir. And do you think this is the number after which we can see a good traction in revenue?
Yeah, because ultimately it is all, when somebody sees your product installed in an environment like a kitchen or a, studio, that's when they can easily correlate. It is not a product like where you can buy just on a small piece. So you actually have to be in the environment.
Sure, sir. My next question is, you also talked about the residential and commercial. Residential are doing quite well. So if you can talk about for say 9 months, what was the mix and what was the mix say 2-3 years back, just for us to understand.
See, when I said residential and commercial, I didn't say that I am actually tracking closely. So what I meant there was that we have customers who are in residential brackets, who are in commercial brackets, and who are also in both the brackets. So if you look at our previous growth, you will see that hospitality was one of an important market which we used to cater. That is mostly a commercial segment. That segment currently in the United States is not really booming because of the tourism restrictions and other COVID-related issues. So that's one aspect of the commercial. Like in that, similarly, there is another aspect of commercial is the new buildings coming up. New commercial complexes, new shopping complexes, new offices. Those things will come up. Typically, that is where the revenue model will come in. So we don't go to the customer saying that, okay, you are in residential, you are in commercial. We go to a customer who have a base in both the channels, some of them.
Sure, sir. So it's difficult for us to track.
Yeah, I think since we do not do a direct end consumer sale, so we do not actually know exactly that this has gone to residential, this has gone to commercial.
Sure, sir. My next question is, one of our big customers had acquired a company who also do similar quad surfaces and all those things. So any lack of demand or any signs you have seen in terms of the offtakes from that customer?
See, honestly, many of our big customers have their own facility, not from today, but from many years. So I think having an own facility is not detrimental or positive for us. I think the situation continues to be what it was for us, even if they acquire or did not acquire a business.
Okay, so you have not seen any lack in demand?
What you saw was only one of the customers reported, but there were customers who have been buying from us who already had plans much before what was publicly announced. So I don't think that's an item to look into.
Sure, sir. Final question is on the product mix side. So you said, given the shipping constraints, there is issue in terms of capacity utilization going forward. So any targets for FY23 in terms of utilization level? And secondly, product mix what is the rough mix as of now in terms of, say, if you consider value added specific designs or thickness, What is it today and what we are targeting in the next 2-3 quarters?
See, the product mix is the subject matter of what is our customer's demand that comes. So we cannot dictate a customer that this is what they are supposed to take. Product mix depends on what is the demand coming from the customer. So we have to follow the customer's demand. It can be 20 mm, it can be 30 mm, it can be more exotic and expensive product, it can be a low-end product. So this is a very question which cannot be answered, and it always depends from time to time, customer to customer. So,
but normally the
answer the way you want to answer about that.
Yeah. My question was, normally any trend will last for. Does it last for a couple of quarters?
Consistency, please. You must understand.
See, as I told you, I was answering somebody's call before. It's in a fashion industry. There are some colors or some designs which will always last, and there are some designs or some colors which will phase out. So I think one has to understand the nuances of the fashion industry, and that will give a large understanding of how the trend would move around.
Sure. And if you can answer the utilization question for FY23, unit 2 utilization we are targeting.
Yeah, see, target is definitely the optimum level. But then again, as I said at the beginning of my discussion, everything is subject to the shipping situation.
Sure, sir. Thank you for answering the question.
Thank you. We have the next question from the line of Dikshit Doshi from Whitestone Financial Advisors. Please go ahead.
Yeah, thanks for the opportunity. Sir, is it possible to bifurcate the 175 crore of top line in the quartz business between the old and the new plant?
I think for competition reasons, we will abstain from doing it, and I think that is fine.
And is it fair to assume that at peak utilization in new plant, we can do 400 crore of top line?
That's what our focus is, that to drive the revenues there.
Okay. Now, just one clarification. You mentioned that, for next couple of quarters, the utilization might remain at a similar level. Is it mainly, so it's mainly because of the shipping issue and not because of the demand?
Yeah, you are right.
Okay. And my one last question from my side. So I know it is still quite early to ask, but let's say whenever in couple of years, whenever we plan for a next round of capex, we do have some basic infra already in place at new plant. So how much time it will take for new capex once we decide?
See, it also depends upon what type of capex you are doing. Are you doing a capacity addition capex, or are you doing a design maximizing capex, or you are doing a balancing capex? So depending upon that, the period can be anything between 3 to 15 months.
Okay. So that's it from my side. Thanks.
Thank you.
Thank you. We have the next question from the line of Arvind Kothari from Niveshaay. Please go ahead.
Congratulations on a great set of numbers, sir. I wanted to understand in terms of our design capabilities. So if I generally understand that there will be products which would be higher priced because of the capabilities that we might have, and there will be other products that will be going from India which may not commoditize maybe. So is my assessment correct that we will be targeting more on the design side, and the capability of more luxury trend should benefit us?
Yeah, see, if you've been following us, you'll understand that, as Mr. Jain just mentioned, the first constant is the demand in the market and the customer's request. So every customer has a product at the bread and butter category and then at the luxury category. So while a manufacturer will always try to, push the product towards the luxury category more in the shelf. But then one has to be practical that when we service a customer, we try to get as much space as we can and try to focus at the levels we want. But then there are some shelf space where we have to be there just because we are part of a larger portfolio there.
Got it.
So that's why. So while we have R&D, we have design capability, and we have experience and everything needed to make an exotic product, and our intention is also towards that. But then we have to be aligned also with our customers' goals as to where the product portfolios are, because they keep phasing the product, keep bringing. So we have to keep balancing that equation.
So I just wanted to understand if there is a higher trend towards exotic products, then our company would be better placed than maybe our competitors. That is a correct understanding.
I believe so, because I believe that we have a strong R&D, we have a strong designing equipment, experience and everything. So if the market moves towards only exotic, I think we are better placed definitely than others in the industry in India today.
Perfect. And sir, the second was on the realization of both the plants. Now, maybe both the plants might have similar realizations, or there'll be a gap because we were also enhancing the capability of our older plant towards the new plant's finishing capability.
The realizations have still not reached the identical or similar levels, so there is a gap between the two units in terms of realization.
Okay, got it. And sir, regarding the anti-dumping duty, which review is to happen annually, right? So any thing on that have we heard of?
Yeah, so we again have been selected as the mandatory respondent. So we've made all our filings to the department. The process is on. So I think this is an annual process and it will run.
Okay. So higher chances of us going through, right? I mean.
Sorry, I didn't get you. What do you mean?
So I guess there'll be no scare of the duty. I mean, in the near term, we feel.
Yeah, we've been very consistent in our positions previously also. We continue to believe that we do not dump and we do not get any subsidy from the government.
Got it.
We don't dump, we don't get a subsidy. I don't see there should be any reason for them to tax. But then laws are not in our control, We just can do what we can.
Perfect. Thank you so much, sir.
Thank you.
Thank you. We have the next question from the line of Ruchika Dhanuka from Kambata Securities. Please go ahead.
Good morning, sir. My question was related to your distribution network in North America, and once the shipping situation improves, how do you plan to, expand the network?
This is the operator management. Just checking if your line is still connected.
Yes, now.
Thank you.
Some connection issues. Hello?
Sir, just stay connected. Let me just check the management's line. Thank you.
Please.
Yeah, we are able to hear you.
Please go ahead, sir. Would you want the participant to repeat their question?
Yes, please.
Ms. Dhanuka, please repeat your question.
Question was, how is your distribution network in North America, and once the shipping situation improves, how do you plan to expand the network?
See, as you are aware that we have been focusing on North American market for 30 years for granite and also last 15 years for quartz. So our focus will continue to service the existing customers and look out for any more potential good customers in North America. So what we have on our portfolio itself is good enough, and you can see the numbers that speaks about it. So of course new customers are always welcome depending on the product that we are having and what they are liking. So this will continue. On North American focus will still continue.
So do we have an office in North America?
No, we don't. We service from India.
Right. That's it from my side. Thank you.
Thank you. We have the next question from the line of Rupesh Jain from IntelSense Company. Please go ahead.
Hello, sir. Thank you for the opportunity and congratulations on fantastic set of numbers. My first question, sir, is in our Hyderabad plant, do we have additional land brownfield capex if we decide to do it?
We have 40 acres of land where the plant is located now. So that's more than enough for any further expansions required.
And what kind of capacity, can we double capacity if we decide?
It will depend when we decide to do. We have enough land to even triple or increase even more than that.
Okay, sir. And sir, did I hear that right? That sinks, whatever new integrated sinks product that we have done, it is not ready for US market as of now. It's only for India.
See, integrated sink has to be sold in a different way because it requires a lot of expertise to integrate the sink today. So we also have products which are ready for the US market, which we have started positioning in the trade and giving some samples and doing some tests and all. So there are different products for different markets. So since there was a COVID, we had to use that period to do the pilot runs and understand the product. So that we thought that Indian segment where we are monitoring on data, we could easily monitor on very closely. That's where we started doing it. So I think the results are fantastic. And if you guys are, you can just go onto our website and see. It's for everyone where our products are displayed. And most of the kitchen showrooms where our products are on display may have a integrated sink along with it. So you'll understand as to when I say integrated sink, it's like today when you look at a sink, either you have a stainless sink or some other metal sink or some granite sink which is fabricated and joined and put it in a kitchen. So when we are saying integrated, it is actually a sink which will be similar to your countertop or will be of the same material as your countertop. So in the kitchen, the entire thing will look in a harmony and synchronized. So that's where the R&D is on, the products are ready, sampling is going on.
So just to reiterate, sir, I mean, I have gone through your website. The sinks are really beautiful. And I think in one of the calls you said that the realization of integrated sinks is like 40,000-50,000 versus 4,000-5,000 for a metallic sink. But with this kind of higher realization, I mean, would it not be better to focus on export markets there and more, and also we sell pots, right, in these markets?
No, I think when you look at one side of the picture, probably because since you understand only what you see on the website. But then there is a journey which a product has to take through. Just because I get a 50,000 today selling in the Indian market doesn't mean that the realization will be the same in the other markets. And secondly, there is a value chain. See, I cannot go and service today in the United States. So we have to develop a network who is into the product, who can offer this. So efforts are there, and it's a unique product. Nobody else in the world has it, and we have developed this technology ourselves. So we have to take through the entire process. So it's a biological process, so we have to pass through all the stages.
Okay, sir. And then my next question, sir, is I think in Q4 we were expecting that in Hyderabad plant will be ready, ready to do some value-added products. I think it's a new technology, new plant. So have we been ready to create new design samples? Have the team reached that level?
Yeah, so there has been a constant improvement in the product designing capabilities in the new plant. But then, as I said, everything is linked also to the shipping situations, because today customer doesn't want to really introduce a new product, unless he is confident that the new product would arrive. Because if he adds the new product and at the cost of the old product, and shipping doesn't permit it, then the entire shelf space will be in a secured position. So today, I think everyone is more focused on making sure that the existing products are serviced well, and the new products, once situation improves, they should be ready to be accepted.
Okay. So then H2 is a reasonable expectation that we'll have some of these higher end products, at least 10-15% of revenue. Is that a fair statement to make?
See, I don't know about the fairness of the statement, but what I can tell you is that we are always positive that we have to improve. And if there is a situation which permits us, definitely our focus is towards making sure that we get a better realization.
Okay. And so then my last question is, has Vizag polishing capex been commercialized, or it is still some work is pending?
Yes, sir. So we just have capitalized the entire investment, and the commercialization is just we're doing a little more fine tuning and should start soon.
Okay. Thank you for answering all my questions, sir, and best of luck.
Thank you.
Thank you. Ladies and gentlemen, that was the last question, and we will now close the question queue. I would like to hand the conference back to the management for closing comments. Please go ahead, sir.
Thank you everyone for joining us today on the conference call, and I look forward to talking to you again in the next quarter. Stay safe, be well. Thank you.
Thank you. Ladies and gentlemen, on behalf of Pokarna Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.
Thank you. Thanks everyone.